Over the last 2 weeks or so, I've been testing this scalping strategy live, and it's a lot different to what I would normally do. It's quite a departure from ICT concepts or whatever I've been trading in the past. And I've just been trying to really narrow something down to use on my prop firm accounts to, something that suits my trading personality more, which is quick scalping, one-to-one, getting in and out of a trade, and ideally being able to trade without having to take into account higher time frame bias, without having to worry about market conditions, and just being able to come in, say, for 1 to 2 hours a day max, take my trade setups, walk away. And I wanted to get something as mechanical as possible that is, not as reliant on bias and subjective viewpoint. And what I find with trading ICT, I still trade the 2022 setup on my personal account. But what I found is that it's very, very reliant on individual analysis. And, you can do all that analysis just for, at the end of the day, that 50-50 bet to be thrown out the window. And that's my view on the market, guys, my philosophy. A lot of you will disagree with that, but I still believe, even with ICT concepts, end of the day is still betting. Is it going up or is it going down? 50-50 bet. I'm not that interested in doing massive analysis on all these bloody PD arrays at different levels, different time frames. I really don't care for that. I want something that is a little bit more suited to my personality. I'm not that analytical. Like I say, I'm a gunslinger, boys. I'm not trying to go in there and make all these top heavy, neurotic analysis. It's not for me. So I've been trying to build this, and I've had very promising results with this strategy. Now, to give credit, this is inspired from 3 people. This is inspired from, of course, ICT. This is using some logic behind these trade setups from logic learned from ICT. It's inspired by Dave Teacher's FX, inspired by the way he views the markets, the way he trades, and inspired by Stoic TA. Stoic TA, I watched one of his videos on market structure, which really helped narrow down things in my mind to what I'm looking for. So credit to those 3 guys before we get into this. And also a quick disclaimer as well, guys. This is still something I'm working on, something I'm building. Yes, it's had fantastic results so far, but I'm still learning, still building this for myself. So make your own decisions. This is not financial advice, purely informational. And this is just me sharing what I'm doing at the moment, what I've learned so far, and what my rules for entry are at the moment with this trading strategy. So risk disclaimer, make sure you read that. I'll leave it up for 5 seconds. 4, 3, 2, and 1. And here are the results from last week using the 15-second chart only. I've backtested both the 30-second and the 15-second chart, as you will have seen in Twitter. The 30-second chart had also a great outcome, but using the 15-second chart, I was able to get an even better outcome. There was more setups, and in turn, they were more profitable overall. So this is the results from last week. Using the 15-second chart, a fixed 5-point stop, fixed 5-point take profit. I'll get into the checklist and the details of the strategy just after this, but just before we get into it, just to show you what this is capable of so far. This is last week, trading 1 p.m. to 4 p.m. Eastern time. Total ticks gained on the week, 960 ticks. So that's ticks, not dollars. So imagine 1 contract, about $4,500 on the week, 2 contracts, which is what I'll most likely be using this coming week on my Top Step account, $9,600 on the week. Now, I was planning to use 4 contracts, which would, have that up at $18,000, $19,000 on the week with 4 contracts, but I think I should still take it slowly, go for 2 contracts. One thing I did notice with the strategy as well is that because it's on such a low time frame, 15-second, there is some issues getting filled with more than 4 contracts. So that 2 to 4 contracts is the sweet spot for trading the strategy I've found so far. But there's plenty, as you can see. Ticks gained, ticks lost. So overall, lost 360 ticks, gained 1,320 for a total of 960. So there's your results for last week, just as an idea. As you can see, the wins far outnumber the losses. That's taking every single setup I see on the 15-second chart during 1 p.m. to 4 p.m. Eastern time. Right, enough talking. Now I'll show you the strategy itself. So here's what I look for. This is my checklist of what I'm looking for, and this is the pattern simplified on a line, so you can see exactly what I'm looking for. Now, what you ICT guys will notice is that this is very similar to a breaker block. In fact, I think it basically is a breaker block. Before we get into this, guys, this works on most time frames. The strategy, the principles behind it is pure market structure. So It's working on all time frames. It's just a matter of preference, really. So I've looked down to the 5-second chart, the 1-second chart, 15-second, 30-second, 1-minute chart, 15-minute chart. The same principles apply on every single time frame. This is just market structure. It's trading price action market structure, nothing any more subjective than that. So what I'm looking for on the 30-second, 15-second chart is this. My first condition is, if we're looking for buys, I'm looking for price to sweep above a high. So see here, price trades above a swing high. So it's gone above. Immediately after it's gone above the swing high, I'm looking for it to trade below a swing low. That's like a fake market structure shift there, turtle soup type thing. So once price is traded above a high, below a low, then I'm looking for a market structure shift, displacement, a trade, price to go above that leg that manipulated both sides. So this is effectively a turtle soup. Okay, so price has come down, fake breakout, boom, flipped immediately to the upside. That's what I'm looking for, okay? So once you've got that high sweep and then that low sweep, I'll show you an example on the charts for real. I've got a bunch of examples here. Once you've got that high sweep and that low sweep, then what I'm looking for is I'm grabbing the fib and I'm drawing the fib not from this leg here that broke market structure again, but from the leg that took out the high and took out the low. So the manipulation leg, it went high, went low, then traded back above. So this manipulation leg, from the low of that manipulation leg to the high, drawing the fib across that level, okay? So it's anchored right there, low to high. And what I'm doing is I'm waiting for price. I'm putting in my limit order, waiting for price to retrace, tap. My limit order is resting at the 0.3% retracement zone, waiting for price to tap there. And then I'm putting in my trade at 1-to-1 for a 5-point stop. 5-point stop. Okay, it's totally mechanical. It's not based on market structure or anything subjective. Totally mechanical. 5-point stop, 5-point take profit, 1-to-1. Now, a lot of you guys will be like, yeah, but shouldn't you go for 1-to-2, 1-to-3, you know, get more out of the move? I've back tested more than 1-to-1. I've tried 1.5. I've tried 1-to-2. And what happens is the win rate drastically falls off. It's far less worthwhile. A 1-to-1. The win rate is extremely high, as you saw from the data from last week. The 1-to-1, the win rate is extremely high, and it makes up for trading at a 1-to-1. You know, so as I said, this is what I'm preferential to doing. But you yourself, you can test it yourself 1-to-2 if you prefer to do that. But I'm telling you guys, from what I tested, 1-to-2 did not work anywhere near as well as 1-to-1. Some people say, why 5 points? Why 5 points? I've tested putting the stop at the market structure low, targeting a 1-to-1 from there. Again, pretty good results, but the best results I've found so far, my experience, my opinion, has just been a 5-point stop, 5-point take profit, 20 ticks either side. So that's what I'm doing. Entering, boom, and that's vice versa for a bearish example as well. So we're looking bearish. I'm looking for, first of all, a sweep of a low. So this swing low here, sweep below, price to immediately trade up, sweep the high, any swing high. So low sweep, high sweep, then price to break that back down, drawing that Fibonacci from that manipulation leg, from the high from the leg that swept both sides, drawing it across, again waiting for price to trade back in, tap that 30%, put my trade in at 1-to-1, 5-point stop loss, 5-point take profit, and letting that just whip that. Now, a question that a lot of people have been asking is why the 30%? Why not the 50%, the 70%? From what I've found so far from my tests is that price often, even if price is going to come back and whipsaw and price is not going further down, price generally gets a reaction enough for me to nab that 5 points from the 30%. A lot of the times 50% is not even tapped unless we're going completely the other way and I'm not going to get my retracement. 50 and 70% I found to be quite redundant. I have them there just as a reference, but the 30% is where I've found the most success. Once it taps the 30%, most likely to get a little retracement, even if price is not going to go all the way in the direction that I'm expecting. All I need is 5 points and I'm out. That's what I mean by I don't necessarily care about bias, higher time frame direction, none of that, because I can grab this backwards and forwards, any direction, any condition, every day. Everything is trading. We trade everything every single day, as Dave would say. So that's what's been working for me so far, guys. Now I'll show you some real examples here. This is from Friday, just past. Now, also one thing to note as well, guys, is the 5 points. That 5 point stop and take profit is effective for me on the 15-second chart because of the small fluctuations. If you're trading the 1 minute plus, you probably need to play with that yourself. Like I said, you need to do your own back testing and figure out what is the perfect number for you. 5 points has been perfect for me on the 15-second chart, 30-second chart. So here's an example, guys. This is a buy, a long setup. Okay, so first of all, let me draw this out. So first of all, see we have swing low, swing high, swing low, swing high, swing low. Now what's happened here is, look at this. This price here made a swing high above this swing high. Boom. So it's first condition checked. Okay. High sweep. Check. Next, I'm waiting. Well, as soon as I see price trade above that high, I'm looking for price to come below a low. Here's the swing low. Price traded below that swing low. Boom. Low sweep. Then that manipulation leg. So from here to here, that manipulation leg, this swing high, I'm waiting for price to come above that. And as you can see, price then traded above that manipulation leg's high. Check. What I'm doing then is I'm grabbing the fib from the manipulation leg low, manipulation leg high, pulling it across, and I'm simply waiting for price to come down. I've got my limit order set in at the 0.3% Fibonacci level. I'm waiting for price to come back down, tap that zone. My order's in there, 1-to-1, 5 points, boom, take profit hit, easy. And look, as you can see, price wasn't even going to continue higher, but from that zone, it gets enough of a retracement to tap the take profit before continuing to chop around. That's what I mean. This happens over and over again. Let me get you a short example right here. So I've got a few. This is from my back testing example, guys. So bear with me here. So here's one again. Now this one here is on a slightly larger swing point. So again, you have a trade below a swing low. Price came below here. Traded below that swing low here. Came below, came up, traded above a swing high. So low sweep, high sweep, check. Okay. Traded below the low, traded above the swing high. And then as soon as price came across and traded below that low, that swept both sides, okay? Trade below the manipulation legs low, which it did right here on this swing point. Check. I'm then grabbing my fib, drawing it from high to low and waiting for price to come back in, tap that 30%. As you can see, it came back into the 30%, came up a little bit of drawdown, and then dropped down for a 5 point take profit. Boom. Right, now, here's some little extra rules just for context, guys. Candle close to me does not matter. So people say, what about if the candle doesn't close below the swing point, doesn't close above the swing point? This is, I don't know why, but in the trading community, it's very common. People are like, oh, I got to wait for a candle close. My thoughts on this is that on some time frame, that candle is closed above that high or below that low. To me, the candle close is irrelevant because it's totally dependent on what time frame you're looking on. To me, that candle close, completely irrelevant. All I'm really concerned about is price willing to trade below that level, or is price willing to trade above that level. I don't care if it closes above or closes below. Was price willing to go up past a certain swing point? Was price willing to go down below a certain swing point? I don't care if it closes or not. I'm just looking for the willingness of price to go below and above certain levels. So that's one thing I want to clear up there too, guys. Personal rule of mine. Next rule is I only use limit orders. So I was initially using market orders to get into these positions. I was finding that I was getting slipped a bit too much. With this strategy, it's very important that my entries are at the exact level I need to get in at. So that's why I have limit orders set in, so it only gets filled if that particular level can give me a fill. So that 30% Fibonacci retracement level. When do I stop trading on the day? So I stop trading once I'm down 5R. So that means I'll have to, be down 5 in a row pretty much to get to that point. And I'll only end the session early if I'm minimum up 5R. What I mean by end the session early is I trade from 1 p.m. to 4 p.m. I'll only stop trading on the day early before the end of the session if I'm up a minimum of 5R. Otherwise, I have to trade to the end of the session, just see where I end. Okay, so this one here, it really is a numbers game, this strategy. It's got a high strike rate. Obviously, the more I take, the more profitable in general it is. So that's my rules for myself that I have in place. Okay, so that's how it works, guys. I hope that's clear. Market structure can be a bit of a funny thing. I'll make a video on market structure itself, but basically a swing point is anytime you see this. Imagine these are candles. Anytime price has a low with two higher lows on either side, and that can just be a candle. So, you know, candle like this, candle like that, candle like that. That's a swing low. Candle like this. That's a swing high. Okay, basic market structure. So I hope that makes sense, guys. I'm still working on this myself, still building it, putting it together. I will continue to explain this and refine it as I go. If you are going to use this, like I said, not financial advice, make sure you do your own back testing, figure out what works for you. This is what's working for me. I'm using it on stream every single day this week. So come along, watch me use it, see how we go. I'm really liking it so far. It's extremely promising based on simple market structure. Love it. I know this type of strategy is going to trigger some ICT nerds. Leave your comments if you feel like, you know, telling me how wrong I am. Don't care at this point. I'm well past that, at a stage in my trading career where I'm really trying to adapt something for myself. And I'm still on your side. I still trade ICT, like I said. This is just another strategy to the toolbox. That's it, guys. Update video coming on how last week went. There's a few things to note that I learned from using this last week, so look out for that. That should be out in a few hours of posting this video as well. Anyway, take care, guys. See you on stream.